Okay, let's look into trading patterns in this chapter. As we know so far, market has three phases: an uptrend in which you should only think to buy, a downtrend in which you should always try to sell, and when sideways, try doing both. When an uptrend comes, it will have an extension wave and a pullback wave, creating higher highs and higher lows. Pullback wave will always be smaller compared to the extension wave moving upside. The pullback wave, how far can it go down? We can measure that by a trading tool called Fibonacci retracement. Now don't let the name dazzle you, it's just a name, but the tool is simple. Similar is the case for downtrend. There will be an extension and there will be a rally too. And of course we can measure the extent to which the rally can go through Fib retracement tool. Now draw the respective support and resistance for the trend, and if Fib retracement level coincide with them, it has a higher weightage. That being said, every pullback is a buy setup and every rally is a sell setup, of course with relevance to their own support and resistance, which is most important. Okay, let's see the how do we do the Fibonacci retracement tool and how it can be used on a chart, because what you just learned was just theory. Okay, so what I have is a Nifty chart. What it does is to measure the pullback. Now what did I say? We have an extension, a pullback, extension, pullback, extension, a pullback, extension, pullback, right? On an uptrend there will be an extension, pullback, extension, pullback, extension, pullback. It keeps on going around. So on a downtrend as well, we have an extension, rally, extension, rally, extension, rally, extension, rally, right? So we will measure, take any kind of retracement or a pullback. We will see about that part. Yeah, let's pick this downtrend factor. I am going to choose a tool called Fib retracement. See, Fib retracement or Fibonacci retracement is a tool that is universally available on every charting platform. Okay, and we will also learn something called Fib extension as well. First let's learn what Fib retracement is. On an uptrend, first let's do the uptrend scenario. So that I'm switching the time frame to weekly. Let's see, because I need you to understand in a better fashion. Okay, so I picked this tool, Fib retracement. I pick the low of the start of the trend. I guess this would be that. I click it, I drag it. See, this needs to be 2-point plotting. So first point I pick the low, second point I pick the high. I'm just extending it, keeping the same as high over here. Okay, now what you see is this is a color based Fib retracement, but there can be other where you don't get the colors in other charting platform, so never mind that part. What it does is on every platform the calculation is the same. What do you see over here? This is a total measure of 100% of the wave. Consider this to be 100% of the wave. With this being 100%, how far the pullback comes down compared to this wave? If this is 100, how far can it go? There are certain levels on Fib retracement, which is 23.6%, 38.2%, 50 percentage, 61.8 percentage, and 78 percentage. Now price wave tends to do this on majority scenario, as in when you have this much big of wave, how far can it come down? Whether this is the 23 percentage of the wave, this is 38 percentage of the wave, 50 percentage of the wave, 61 percentage of the wave. If it falls down, this is totally 100 percentage covering has been happened. But for an uptrend to happen, you need higher lows. So this portion is the low. Any low above this is higher low, right? So it can come over 678 or 61 or 50 or 38. That is what Fib retracement is going to measure. So the strong trend needs to at least, or a healthy pullback is 38 percentage or 50 percentage. That is something you need to get in. And what happens over here is, one second, I'm just adjusting my mic. Yeah, so what happens over here for a healthy pullback? Sorry for the delay or hiccup. Yeah, so for a healthy pullback, you need to have a pullback at least 38 percentage or 50 percentage. If it goes till 61 percentage, the trend is weakening. We will understand this part on next chapter, but just get to know 38 or 50 is healthy, or even anything between these two both, because you see this line, this is 38, this is 50. Even if price comes below this zone, this particular zone, it is also considered healthy. So over here what happened was 38. Don't look for 23% because that is too much. I wouldn't say that is hyper trend. I don't want to get into hyper trend. Let's stick with the normal trending scenario. Anything that comes out to 38% or 50% is a healthy trend. And over here, if you just get inside, what we see on 38% level, what kind of candle do we see? That is very important. At 38% level, you see a doji. A doji or a spinning top cannot be used as a support, right? So I cannot draw this, and I'm not looking forward to take this out. On 50%, where is this? This is a 50% length. What do I see? I see a long bear candle. See, whenever you see a long bear candle, if this long bear candle started on top, I would agree that this is the beginning of trend, but it just formed at the at the bottom, right? What it denotes is exactly a selling climax. Usually such long bars should come at the first. If it is an uptrend, something like this is a change in trend, right? You get a big lengthy white candle. Now such candle has to occur at the beginning of the trend, not at the end of the trend. If it is happening at the end of trend, it means it is a climactic candle formation. And so if you didn't catch this, forget this. If you think still okay, trend is still, I think it can go down. What do you see over here? This is 50%. And let's go back and see what do we have here. Do we have any support? I don't see any support, so I would wait. Definitely, I don't have any other go. I need to wait. What happens over here is you get two small candles and a lengthy big candle. Now, based on the theory that I taught you, when you combine this big black candle to another big white candle, you can make this into a single candlestick, right? Do you get it? Yes, of course. I think I can do that, right? So what I'm gonna do, I'm gonna choose to pick a tool called rectangle. Yeah, this is my open of the first candle. So I'm gonna draw the open of first candle like this. Where is my close of the final candle? Here. So I cannot see the body, and open and close is almost the same, so I can draw a body over here, even though I will try to adjust for you guys. I don't see anything that is possible. And which is the highest high? This is the high point somewhere over here. What I'll do, I'll mark the high point, drag it to the body, that becomes my wick. Let me choose the lowest low. This is my lowest low. What I will do is, yeah, here. What kind of candle is this, my boys and girls? Isn't it awesome? Hammer. Now this is a weekly candle, okay? On a weekly candle, you can definitely consider the weightage of a hammer right from its beginning, because on daily it has already given the weightage part. So definitely it is a buy from 50% retracement, and boom shakalaka, it went up. What do you think of this? Now that was one retracement wave that I considered. Now if you want, consider this to be the low and this to be the high. What do you see? This is the 30%, this is the 50%. What happened? Price came in between 38 and 50, and boom shakalaka, it went. What is a candle? Come on, say it out loud, guys. This is a candle, bullish candle, right? Agreed? Hammer, you are drawing a support, price came down again. What is this type of candle? You learned a combination candle, right? Of course, a bullish candle, bullish engulfing candle. Price soared up. Now price, after drawing this fib retracement tool, price went above. How far can a price move upwards? We don't know that part, right? For that, we are going to use a tool called trend based fib extension. I'm clicking it. It's the same thing. I am plotting the low, I'm picking the high, and I am picking the second higher low. Okay, you get an inverted style number over here. Let me take out this so that you don't get confused. Now what do you see? We need to find how far this can move. So this move is a 100% move. With respect to this 100%, and it took a dip of 50% with the help of fib retracement tool, and from this point, how far can it go? What you are seeing, this box I'm drawing, sorry, let me just draw it again for you guys. If you just see, both these boxes are identical. Okay, why so? Why so? Because this 100% move from here to here, that is the same percentage from here to here, because that is fib retracement tool, because this is the price movement measured in terms of percentage, whether it is 23%, 38%, 50 or 61, that is another thing. But please try to understand, an extension plots inverse way from the low point. Now let me redraw it for you again. Pick the low, pick the high, and you will see set of numbers on top side. Now third thing you have to plot is just drag the mouse to the next low point. That's it. I'm just pulling it sideways so that you get to see. Now here it will be white screen, so you don't know, that's why this tool is like so. From here you can expect anywhere from 61% move, because for an uptrend to continue you need to break this high, right? So the nearest uptrend can happen is 61%, which is right above this candle high, right? And the next target is 78, another target is 100% move, and from 100% move you see series of dojis and a big bear candle. Does it mean trend change? Not yet, because you have this resistance being still getting supported by the price, right? It moved up further. If it is moving up further, what do? Pick the tool. Let us draw on monthly. See, fib retracement on a higher time frame has higher weightage than lower time frame. This is the fib retracement for this zone. How far it came down? Let us see. It came towards 61%. Trend weakened over here, but later it gained. Since it weakened, since it was a 60% retracement and a weakening part, price couldn't break the new high, so it came down again. What you have to do? Plot another retracement and see for yourself what happens over here. Price, let me take this out, otherwise you will get confused. Price retraced towards 38% move. That is a healthy uptrend, and it started to move up, and it broke to a new high at this point. Fair enough, that is good. But how far did it go from this point? Let us draw that as well. See, this part covered from, so let me draw it. This was the move. This is a 100% move. It's the same candle, okay? There is no difference to what I'm drawing. It is the same candle that is being drawn. This big box is the same big box, but from here it traveled to another 61% additional. Isn't that awesome? This is how you measure. See, this can be drawn on a for an investment purpose, say for 10 years. How much is the target for 10 years? You can draw based upon this. It's just a rough calculation, and only these two are the major tools that we'll be using in Fibonacci based tool, because you will have many other Fibonacci based tool based on Fibonacci speed, resistance band, time zone, trend based, circle, spiral, and other stuff. I really don't know much other than these two. Trust me when I say this, there are guys who only trade based on fib retracement, extension, and every other fib tools available on this one. I think fib time zones plot based on time something, the time period that it took over here will displays over here, something like that. I really don't know those parts because I'm not an expert in other fib tools. What else do we have? You have this fib some tool. You need to measure the median part. I don't know. See, these are tools that you can do the research on your own, okay? Because since I'm not the expert, I'm no right person to teach you these stuff. If I knew, I would have taught you, but trust me, I really don't know what. This part I used earlier just to measure the, not the fib part. I wanted to measure consolidation, how far a consolidation can shoot up. That's what that I was trying to identify. Okay, and yeah, that's pretty much about fib retracement on uptrend. Now let's see fib retracement on a downtrend. I'm switching to daily candle now. Okay, and where is good downtrend? Let us see. Yep, this is a good downtrending scenario. Now I'm just taking the fib retracement. So for uptrend you plotted from low to high, right? For downtrend you will be plotted from high to low. This is the low. I'm extending it, and this will be 0%, 23, 38%, 50. So this is what was respected by price. Price touched around 50 zones, it gave another extension. It's that simple. That is how you use retracement for downtrend. And there is also trend based fib extension, where you can draw like this how far price can move down. Apparently it just cracked below this low of candle towards this 61%, and it didn't even go down. So that's it about fib tools. Okay, let's learn something regarding breakout now. Did you know 72% of the breakout actually fail? They make loss for retailers. Breakouts are powerful, but those powerful occur on the remaining 28% only. Let's see what the 28% breakout possesses. There are traders who just live on breakouts, okay? The secret to a breakout trading is you need stagnant price for quite some period. That's it. That is a consolidation. Price needs to be stuck in a range, but this ranging has to occur on a trending scenario. Let's make it simpler. What you have to do, open the chart, plot 20 moving average. Price should move in an uptrend, making higher highs and higher lows, but it takes rest somewhere, forming a tight little range, and that area is called as consolidation portion, where price range is tight. During that consolidation, price tends to reach near 20 moving average gradually. That's the area where you have to keep watch with buy stop order right above the consolidation zone. And once you see a volume build up candle breakout from the range, that's your 28% breakout scenario. This is where you buy and having a stop loss below the nearest swing. That is a case of breakout to upside. Now to break down to downside, something like this. Here also you will be plotting your 20 MA, a downtrending stock, taking a consolidation phase at moving in a tight range. It just breaks down. You can take the breakout candle because there will be volume in it. Selling level is that, and stop loss would be swing high. This is how you play breaks. All right. Now moving on, let's learn something called gap. So what is gap, by the way? It is nothing but a space between two candles. Say two candles like this, and the second candle opened with gap above this candle. This is what we call as gap up. On the other hand, the formation of gap down is like this. Now here is the point. Let me tell you, that's gap down with a space. Now the point is, The color of candle doesn't matter for up or down gaps. Gap means just a space between two candles, no relevance to what color of the candle they are. Now consider when price is arriving from a downtrend and upon a support you get a gap up and price started moving up. That can be considered as a new ignition for a bull run. Similar is the case for gap down also. Suppose you are on an uptrend and a candle gaps down, meaning bears took over the market and it can ride south thereafter. Never trust a gap up at top of uptrend. Likewise for gap down at bottom of downtrend. Both of these can indicate a climax on trend. Only poor retailers enter such scenario, which hereafter you won't enter. Okay, if you see gap up or down, check the support and resistance first. Gap ups happening on support is good for entry, whereas gap up on a resistance is indication of trapping retailers by big players. Similar is the case with gap down. Enter them when it started its journey from resistance, and if a gap down is seen on support, it's a strict no. Okay, the gap itself can be considered as support and resistance, but only one test can be considered. If you have a gap up, that can be considered as support since price is up, and resistance in other way case. Once again, support and resistance is the major play everywhere. Try to keep plotting it every single time on your chart. Open your eyes, support and resistance, S&R, S&R, please. Okay, now these are the type of trade patterns which also can be traded with normal support and resistance. Let's see what they are as well. I am not a big fan of all these patterns except some alone, maybe that one, because not every pattern works the same way. All these are subcategories of support and resistance, and all the patterns are basically a breakout strategy. Since these are breakout patterns, I am not a big fan of breakout trading unless the way you see breakout that has been taught in above method. So for that type of breakout you don't need pattern, and more than that I am a pullback trader. So should you also become hereafter, since you are the elite class who is undergoing this course, right? So that being said, let's dive into the pattern in chart itself. Now let's learn the breakout concept and how to trade it. For breakout, you already know we need an indicator called moving average of 20. I'm changing the input to 20, and let me change the style to yeah, blue would be fine. No, that's too much. Yeah, this would be fair enough. So how do we trade a breakout? You don't simply trade a breakout like this. Even this is a breakout, but don't trade this. Even this is another breakout. You're not supposed to trade it, but trade after a pullback. That is accepted because your risk gets lowered. This is a breakout. The breakout didn't sustain for long, but it came down and went up. That is how you should trade. Okay, and we will be trading the consolidation only hereafter. So how exactly price consolidates? Let us see. The best example that I can spot for this time is over here. Price broke above 20 moving average and is been traveling upside. What do you think this is? 1 2 3 4 5 6 7 candles inside this little box, and 20 is coming upside. As soon as price reaches near 20, it shot up. You can buy here. What about this? Isn't this a consolidation? And 20, see, at this candle 20 is here, then 20 comes 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 here. So on each candle formation 20 is reaching the near zones of these candles. It's like a rubber band effect or a dam effect. When a dam is opened, the water flows out tremendously, right? It is a similar case with breakout as well. So it broke out here. Yeah, this, look at this. This is an awesome breakout. 20 is approaching. What happened? Boom shakalaka, it broke out. This is what a breakout you should look for. A 20 has to be moving upwards. It should face upwards. It should angle upwards. And price has to go straight in this zone until 20 travels like this and price travels like this at one single point. You see, both these get very narrow. Over here, very narrow. Price has nowhere to go, either to break down or break out. That happened. Usually price break out, but on rare occasion price breaks down due to some negative inflows or news, something like that. Okay, this happens. Yeah, this is also another thing, but not as close, so leave it. The best stock that I traded with this is, I will show you, PC Jewelers. It was pretty long time back. It had a good consolidation. What is it? It's okay. This is something that I traded. You see this consolidation? Price was in a tight range box for very long time. Now understand this. It's more like a patient animal waiting for its opportunity. Price kept waiting inside this box for a very long time. And note down, all these candles are doji spinning top, doji spinning tops, doji spinning top. See that? All of these candles are doji spinning tops. See, you know that when a doji happens, it means it's a neutrality, which means there is no single winner. It can be either bulls or bears. Upon break of the high or low, then only we can know it is. If it breaks low, it is bears. If it breaks up, it is bulls. So a single small candle has the power to either to continue a trend or no trend. So when there is power for single candle, what do you think a series of candle can do? All of these are dojis, right? When series of doji, this is power getting stored. You know, it's more like a what do you say? Exactly, an elastic or a rubber band, a catapult. You pull the thing, it's called storing of energy. This energy is stored. It has to react to somewhere, right? But look into 20 moving average. 20 moving average is below the price. And this is the first candle that happened. No worries. Let me plot another thing called that you already know, volume, right? For stocks, try to plot the volume. Look how silent the, oh crap, let me just unmerge it every single time. Oh yeah, why not? Let's change the color. Why not make it colorful? Right. Now look at the volume. it's been silent for very long time, right? And here is a first candle that broke, and look at the volume kept increasing. Yeah, the big spike in volume, this is the big spike in price. It broke this resistance. What do you think you should do? This much is the consolidation. If this much big is a consolidation, how far can the price move up? What do you think? Don't you think so? For a single candle the move is very big. If this much series of candle, don't you think the price can simply shoot upside? Now note the point, the price is already in an uptrend fashion. Okay, how did I determine it? It's simple, it's making a higher lows every time, higher low, higher low, higher low, and I'm expecting another higher low as well. And on this process you have a consolidation like this. I took the trade over here, my stop loss was this. Now I trailed on each candle. Since the lot size of PC was very high, I got stopped out here. Every day I was trailing it. Now this happens only once in lifetime, I guess, once in 1 year maybe, for one such stock. This is awesome. I mean, I was very happy that I took notice of this one. Now look at this candle volume and this candle volume. Sorry, I mean this candle's volume is this one. Note it down. What type of candle is this? It's a spinning top. Why is the volume so big over here? Because somebody sold. Whoever bought here has to sell at higher price, and that happened here. What is the next candle? Even higher volume. A bearish engulfing pattern. See that? It's good, right? Now when you see bearish engulfing pattern, don't you think you can see, if not you didn't book here, you can book at this candle's low, right? Just completely take out your profit and exit and forget this stock for a while, because it had a humongous move. Now it's time for it's another hibernation. Once a stellar move, gives some time, and this happened, and we have a breakout. Whether it's a volume, yeah, it is a volume, and change in polarity is taking place over here, and it started its up move again. Now what do you see here? This is a small type of consolidation of 4 candles, and you see big candle over here. That is a consolidation, right? See, the consolidation cannot be always right. Why? Because this was a stellar move over here, and this is the energy. This energy broke out, exploded out. After this explosion, don't expect another explosion, boom. No, it doesn't happen. It needs time. People don't have the mentality to consider this stock because it has already moved up. People feel this has moved up and it is costly. The buyers won't enter it. Give some time. It's more like a petrol's price. 10 years back petrol was 40 rupees, but you don't take notice of the price. It increases like 80 pice, 1 rupee, then 80 pice, 70 pice, then 2 rupee, 80 pice, 70 pice, then 2 rupees. Like that they gradually increased, right? You are getting used to the price of petrol and diesel on everyday basis. Even though it is costly, still it is essential for you, right? So you just get used to the price. Even if it is 100 rupee, right, tomorrow you will feel, oh my god, what the fuck is happening with the government? How ruthless they are. But it is an essential part. There will be people who will be buying petrol and diesel still, right? Once that 100 rupee is saturated, then you will see that takes time for people to absorb, right? If there is a surge in price, say 10 rupees increased right tomorrow, in your mind you will see, oh shit, what the heck, why do this happen? And if you have this news right the day before, what do you think? You will just go to the petrol bank and fill your complete car or bike or whatever full tank for the cheaper price. That is what happened over here too. People just filled their petrol tank and sat. Once it arose like this, boom, everybody sold. But do you think even during this consolidation people will be ready to buy? It takes time. Give another 3 weeks time. If price or petrol reaches 100, give after 3 or 4 weeks, you will get used to that 100 rupees, right? Okay, now this is how life is. Let's move on, and boom, you get to your normal routine life of 100 rupees per liter of petrol. You will do that. And here too, price needs to get used to the mentality of the traders or investors. The longer it travels like this on a same price zone, say around this, what is this, 380 to 340 zones, people got used to it. Okay, PC Jewelers price is okay, it's between this, what so, we will see. And once it breaks to new high, okay, there is another opportunity, people will start to buy again. Holy shit, before it's getting late, let's buy it again. And that is a mentality that happened over here. And some sort of big negative news came into this part. Now PC Jeweler worked out twice. Let me show you how. What do you see over here? Price is in downtrend, right? What exactly do you see? 20 is declining, right? And price is stagnant for some time at this level, but price is making lower highs every time. What happened over here? Boom shakalaka. What just happened? Price broke down after a consolidation. 20 is declining, it is facing down. Upon near 20 over here, it just broke down. Apparently I did not take this trade. I was like, shit, I missed that opportunity. I did not take this trade, by the way. It gave awesome return, but what I did was I took the positive trade over here. Let me tell you how I took right now itself, because this is not a breakout strategy, this is a reversal trade. Let me tell you how. I am going to plot another indicator called moving average exponential. It has been plotted. I am changing the setting of this to 3 moving exponential average. I'm just doing this. Now what I'm going to teach you, price tends to, or it needs to be in a median. Okay, median in the sense, what I have noticed is price usually travels touching this 3 moving average. See, price touches here, price touches here, price slightly touches here, but I would take it as touch. Price touches here, touches here, touches here, touches here. What happens over here? Oh yeah, it touched. What happened over here? It is touching. What happened over here? It didn't touch. What happened to the next candle? Price wants to touch back the 3 moving average. See, this is something that I noticed, okay? Not an exact rule, but I tested it a lot. It works awesome manner. This is one day before. Price didn't touch it. It has also failed at times, but when it works good. It didn't touch here. On the next day, what happened? Price opened and wanted to touch this 3 moving average. It came and touched. Now price is touching, all touches. Now coming back to, see, this is a white candle, okay? On a white candle, if the price doesn't touch, see, 3 moving average is below the price and a white candle appears, it didn't touch. Next day it is a black candle which wants to touch back this 3 moving average to come back it's to median price. Now what I did over here, this is another example. It didn't touch. Next day, boom, it wanted to touch. It came back. Here, okay, it touched. Leave it. You don't have to worry that much. Here, it didn't touch. It is far away. Next day, boom, it came. Here, it didn't touch, but it didn't work out. It tried to move out. Shit happens, okay? Just get used to it. You can't do anything about it. And what happened over here? Look at this. Price started to fall down. I missed this consolidation sell, okay. But I was keenly watching this move. Every day volume was greater. See, for this down move, somebody has to also buy so that somebody can sell. Every buyer has got a seller, right? So volume was building, okay. Then I understood. Then this candle formed. This was the highest volume candle, which is exactly a buy volume. In my dictionary, it is buy volume. Even in your dictionary, it has to be a buy volume by now. You are undergoing this course for a reason, right? Now this is a buy volume candle. What do you expect? This 3 moving average is away. I just bought the very next morning at 9:15. Price went up, boom shakalaka at 128 to 170. It moved further up. It gave awesome return for me. Even though I missed here, I bought here and price went up. Now it's time to sell it back because price has reached the 20 moving average. It is a median, so I didn't want to risk it because this is another set of resistance, and price started to do this double, and I didn't bother. Once I do this, I will just let the stock go because PC Jewelers after a stellar move goes quiet for some time. See the quiet zone explosion. It gave an up move explosion for some buyers. Now it is a quiet zone. We can expect an explosion anytime. What is happening over here? Some series of consolidation. Volume is gradually lowering. There is no participation. But once somewhere something is yet to happen. Somewhere, I don't know. I'm just hiding it. Let's see. We don't need distraction called the moving average. It is just used for counter trend 3 moving average. That is my own strategy that I looked upon. And what else am I missing for this breakout? Yeah, there is another thing called Infratel, Bharti Infratel. Let me show you what that term sheet does. See this? How is this? Isn't this an awesome consolidation? Higher the consolidation, greater the explosion. Now earlier you might have seen me drawing this stuff called wedge or something, right? Something like this. What I did, it was just an experiment basis. This is a consolidation length. My theory is price has to since this is the length of consolidation, price has to travel equal length on upside as well, which is this much. This much price has to travel. That is some theory that I came across. The length of consolidation horizontally will be equal to the vertically part as well. Okay, now if you are asking me how to find consolidation, well, there is a thing called, now let's get back to PC Jeweler itself. Let me show you what you might not have thought about it, but what exactly is consolidation? What exactly is a consolidation? Let me, what time frame is this? This is from 2017 7th month. Okay, let me go to monthly chart. What do you think a consolidation is? What do you think a consolidation is on a higher time frame now? I'm on monthly chart. I took trade here. What do you think a consolidation is now? It's just mere doji on higher time frame. Get it? How cool is that? Have you thought about it? How do you find consolidation? Switch to higher time frame. If it shows you a doji, simple. If it shows you a small body, again, that's it. So to find consolidation or explosive moves, you need to scan through the monthly candlestick. Where do you scan it? You know where to scan it, right? Chartinc.com. Get it? That is where you go and scan through all the dojis. If you have two dojis, see, just go to screeners, you will get tons of scanners. Just type in doji or monthly doji. I guess people would have created that. Yeah, see that? People have created every sort of scanner. These are shared, so you can simply open it up and you get something called Newland Laboratories. Let's open and see what the heck is that about. I never heard this talk at all. Am I on daily? Oh, I'm daily. Let me switch to monthly and let me go to 3-year candle update. Oh, see, we are on a doji, but we are on a downtrend, so you can expect a down move, maybe, I guess. See higher, see how many number of dojis did you see? Look at this, a doji happening after happening. 1 2 3 4 and a bear pullback, but again a doji. Total of 1 2 3 4 5 doji. What happened next was amazing. Price started from what zone? 900. It reached 1500 in 1 month. Guys, this is the power of consolidation. From 900 to 1500, which is like 70 to 80% of the move. If you bought one share of this one, after a month you have the money of two now. Just multiply how much you can do it. Isn't this awesome? Something new you just learned, I guess. Look for dojis, guys, or if not one doji, if you check 2 or 3 dojis in a row, boom, that is your jackpot. Market on a monthly or weekly chart. If you spot 2 or 3 dojis consecutively, okay, or just have it on your watch list. A break above that high, switch to daily candle, you will see a volume surge. Wait for the pullback. There will be definitely some profit bookers happening. That is the first pullback. Wait for the first pullback, enter, get your money, cash it, bank it, spend it, vacation. Great. Now that was breakout, guys. Now after breakout we learned about something called gap. What exactly is a gap? Let's go back to our Nifty, poor Nifty. Remove all drawings. I'm switching back to the daily. Gaps are nothing but spaces between two candles. That much you learned. Isn't this space between two candles? Right? Yes. This is space between two candles. Right? Yep. Space between two candles. Space between two candles. Space between two candles. There will be every time a space, but let me tell you this was the close of yesterday. Today it opened here. Agreed? This is the open. What do you say? This is called gap up because the close is here, it opened here. If the close is here and it opened below this close with this gap, that is called gap down. And if candle goes down, that's a gap down candle. Here it gapped up. Close, gapped up. Now this was your close day before yesterday. It opened here. It is also a gap up, but it came down. Now this was your close on this candle. It opened here, it's a gap up. It closed here and it opened below this. This is gap down. Closed here, opened here, gap down. Now, how significant are gap ups and gap downs? That part we are going to learn looking into charts. Look at this. Let me draw the resistance. This you can do, right? And I am drawing this as well. Now you know by support and resistance concept, price did this spinning top. You got a bear candle. Next day it was a bull candle which was held by this support. Again, you can combine both these candles and make it into a single candle by your imagination. You don't have to draw every time. Just use your imagination. Open, close here, high here, low here, wick. This is your body, wick. Use your imagination every time. Okay. This was a close for that day. Next day it opened here. It gapped up literally. It gapped up and it went up. On the following day you see another gap up. If you see a gap up from support, it is a bull run. It went up, it went up, it came down, gap down and went up, it went up again and did this. Now we have approached resistance. Okay, what do you see over here? This is a bull candle and a gap up on resistance. It went up but it couldn't sustain, it reached back. Again gap up, again gap up, gap up over here. See, on a resistance never trust a gap up because that is something fishy or a trapping scenario. And it came down from here. On a support, look for gap ups. On a resistance, look for gap downs. Okay. Now gaps have this theory called filling the space. If you take notice over here, this is where the candle closed by evening. Next a candle opened here. There is this space, right? But this space was actually filled by the price same day. It went over here, but buyers came back and pushed the candle up. until here, and then sellers came in and closed the candle here. This was the story. Now what I'm emphasizing over here is, on most gaps it opened here, it came down, filled the gap and went up, gapped up, came down little, went up. Look at this wick. Every wick, price tried to touch or tries to do so. For every gap there tends to be this process. This is a wick, price never try to touch this, it just shot out. Where else? No, that is just a theory, okay? I mean, you don't have to follow that. You are only support and resistance trader, okay? Always try to do the support and resistance. And let me show you. Oh yeah, from here this was the close, it opened here, first filled the gap. When I say filling, this is the low. Price simply tries to touch this low and then do what it needs to do. Okay, you have the close here, price opened here, boom, it went down because there is a wick which is already filled, and it gapped down, it closed above, tried to do this, no, failed. This was not actually a technical setup, this was more of an election budget setup. Stuffs like this happen at least once in a year. Rest of the time it moves in a respected manner of support and resistance. So in short, gaps are something that you should look only on support and resistance. At resistance, don't look for gap ups, that is trapping, only look at support. See, on resistance look for gap downs. Okay, that should conclude gaps and ups and downs. Now there is another thing called climactic setup. Climax. For every uptrend there should be a climax, right? A climax that will do something called, let me give you an example what a climax. Yeah, this is an awesome climax. Let me show you. Let me draw this resistance. Price broke out, took change in polarity, took support. At support, what do you see? A gap up, price started to move up with another gap up, a 3-day consolidation, gap up, another 3-day consolidation, gap up, price went up, and next day you see gap ups over here away from all this support. Don't you think that is fishy? How can price go everyday gap ups after gap ups? How gap ups create is just due to the fact of demand. When there is high demand, price just simply, the seller wants to sell at high price, and that's why we get gap ups, and gap downs are just due to the supply factor. There is huge supply, hence buyer wants to buy even cheaper, so we get the gap downs. Sorry, this should have been the first part where I should have explained it. I'm sorry, I'm bringing it right now, but still now comes the part called gap ups here. Next day you see a spinning candle, this is another thing, and what happens over here, price just came down. See, I will explain in another as well, because in Nifty you don't see that much of a climactic candle setup. Yeah, this can be considered as a climatic candle setup. See, on climatic candles, you will have a big bull candle on an uptrend and a big bear candle on a downtrend. That happens a lot. Yeah, something like this. This is a big bear candle at downtrend. See, the downtrend has been happening from where? Yeah, from here this downtrend has been happening, and you see at this point This is a big bear candle. Whenever you see long bear or long bear, sorry, whenever you see long bear candle at the downtrend, you should think it might be a climax, because that is a final set of sellers trying to sell. And when you see this, uh, see in stock market there are traders and investors. Okay, see, all a trader wants to do is just quickly make returns, buy and sell, buy and sell. That's what traders look. But for an investor, he has only one option: to buy shares. So where would he buy? He wants it at very low price. When you see this peak of a black candle, for an investor perspective, it's more like a big cheaper price that he can acquire the shares, right? And that is what this resembles for them. They have the tendency to see these as a buying opportunity than selling as seen by traders. See, this was a big bear candle. The next day, obviously, price opened here. These are the traders part. It came till here, but investors stepped in from here and made the price move up. Investors have the cash, traders have the money rotation only, right? They take in, take out, take in, take out. See, that's what traders does. Money stays inside the markets only from investors. This is the first set of investors that bought here. When price reached back this support zone, this is the next set of investors taking participation. This would be the final set of investors. From here, traders take the price upwards, and small minuscule investors who feel, okay, I am late to the entry, but still what, I think Nifty will perform excellent in upcoming years, so I will buy it over here. Obviously it turned out good for them. That is another thing. What I was saying was climactic sell setup. Sorry, climactic buy and climatic sells. Yeah, one big example that in my own case, I took this trade long back due to this factor. Uh, Yes Bank. Yes Bank had this stellar move up. Of course, every investors are awesome. Okay, now what I'm gonna do, I'm gonna plot our usual indicator called volume. I don't know why I close this volume every single time. Let me unmerge it down. What did I do? It didn't pop up. We have two volumes set up. Okay, now you see this big spike over here in volume part. What does it represent? We are on a support, and you see big spike over here. What do you think this is? What is the price? Around 140 to 120 zones. Do you think this is some big investors buying it? Possible, right? And this is the resistance. Price went up, down, up, down, down, up, down in a big tight range, and it broke out finally, giving it inch by inch moves. It kept on moving in a straight line. This is one stock that I never assumed it can. See, I never had a participation in Byron. I only sold it. I was waiting for the right opportunity, by the way. Where did it happen? Let me show you. Look into volume, by the way. That is what shows. I'm looking for a profit booking scenario. This was one thing that happened over here. A big red candle corresponding to this candle. This was, I would assume this to be the first set of profit bookers. Why? The volume over here is around 83 million. Just look at the right side over here. 83 million. Okay, this is a second set, 64 million. Some sellers and buyers combined together. This is another set of buyers with 56 million. This is the first set of sellers coming on board. I assumed, okay, next day there can be some set of selling which I can sell, but to my surprise it kept on moving upwards. It was literally surprising. I thought there can be some manipulation involved in, maybe, but I had this on my watch list. Next you see this big volume, the heaviest volume, 110 million. On what candle? A spinning top. What does spinning top indicate? It is neutral phase. Neutral phase from what? After a stellar up move. With this high volume, what does it represent? Do you think this is a buy? Could anybody buy on this candle? Do you see the price being, see, let me show you the buy candle over here. This is a buy candle. This is its volume. It justifies whatever that is been understood, right? Big long white candle and big long volume spike. This both justifies. But what about this? Do you see a big long white candle? No. But do you see a big long volume spike? Yes. What is this? It's a high wave spinning top, but I would say this is a profit booking. Look in context with volume. You will see profit booking and buying. This is the one part that institution can never hide. Volume has to be displayed. Whatever they buy will be reflected on volume bar. Institution bought here, it is reflected here. Something you can always try to interpret. So this is the correlation with price and volume. You see this spinning top, this big volume, confirm profit booking. I had my eyes to sell below this. What did I do? Next day I had my trading plan set up. This is my sell, this would become my stop loss. Possibly this could be my first target, because obviously this is a big move, right? It should come down, and you can draw the fib retracement as well. It is possible, but that is a huge, if I do that it can come till 38%, around this zone, maybe, possibly, I don't know yet, or 50%. Guys, let me tell you, this is counter trade only. What I am trying to do is counter trade, trading against the trend. The trend overall here is, what is 30? It is 221. Okay, the trend overall here is uptrend. What I am trying to do is trading against the trend. It's like swimming against the motion of river. See, if you swim along with the river, it is easier for you to become profitable, but when you try to go against, it's a bit skeptical. Okay, but there is one thing that I would like to tell you, which shall be revealed later. As if now, let me just continue with this. What happened next? You see another spinning top or a doji kind of thing. There is two dojis now. Still my trade is here only, sell here, stop loss here. What let's see, it moved up. I was like, what the fuck, how can this happen? Then I was aggressive. I moved my entry over here. If next day if price touches here, I will sell here. This shall be my stop loss. I didn't know who is taking the price up. Then I realized this is a big trap. See, a bigger candle. See, this is a scenario. I didn't see the news for this day, but to my experience. If you see this much big candle on a stellar up move coming from right from bottom, and this much big a candle, and see the volume is minuscule compared to this is a definite retailer's participation only. I am understanding, because I never saw the news on this day, because I don't trade based on news, but the media, say CNBC, ZTV, whatever, those guys, ET Markets, I think what might have happened is, this is institution's profit booking day. They wait, and they will start to stack a sell order as well against retailers. When does it happen? When media publishes good news regarding Yes Bank. Over here it is Yes Bank. Whenever there is a good news, the retailers like us, the TV watching guys, the media watchers, those guys tend to react to those news, and that is what must have happened this part. It opened here and suddenly started to move up. This open is exactly, what is the open? Sorry, I'm checking this part. Okay, the open is 278, the low is 278. Open is equal to low, and without even bears coming in, it started to move up. It cannot happen like this, never ever. On an see, on an average, look at this, how much far this each candle looks like for Yes Bank. It moves very slowly with small range. On this, it moved like this, means some media news came in. Don't believe in media news ever. This is my number one advice to you guys. Don't ever believe them. But you can experiment with what they say. If they are saying some good news, that is a potential opposite trade for you guys. Check with charts. Now here I suppose there was a big good news happening, hence retailers stepped in. There was a huge demand. What is the price? Price was around 290. See, this is before split. Okay, at that time this was not the price. It's not 288 at this point. It was something different. S Bank had splits and other stuff, so the price is reduced over here. But either way, candles are candles. You don't have to go with the price. See, this is I understood this is a climax. Obviously, for every stellar move there has to be a climax, and this was the climactic candle that happened, which was confirmed by this spinning top and this much peak of a volume. There is no more demand left over here. Every profit has been booked. Why? Over here, look at the volume, 100 million shares. It's not even 100. How much? 113 million shares has been dumped. There is no more demand to this Yes Bank. The whatever demand that rose was with our own retailers. This is retailers' money getting trapped. What I did was, upon 330, nearing 330, 325 around, I took an option, a put option. See, for beginners, you might not understand what options are, but for your sake, let's say selling a futures. Okay, I put it this way. I sold one lot of future, put it that way. Okay, at exactly around this zone. This happened, people. I was in the money. I also know that this is not the only move that is remaining, because what comes next? What is this? A candle pattern, right? The pattern's name is piercing pattern, dark cloud cover. Okay, the name's not important, but for you guys, you should know club mix both these candles. What type of candle is this? That type of candle is That type of candle is a shooting star. So when this shooting star happens, what happens? So what happens on shooting star? Of course, every candle traders is going to just sell, right? Now comes the traders part. So far investors took the price out, but when traders step in, that's gonna be bam. It's a long bear candle with the gap down. What? Will it end? No, it came down further. What is he? Isn't it awesome, spectacular? It can't stop, right? It has to move, right? This much big of a move, it has to come down. See, this was the first set of institutional profit booking happening. See, this profit booking doesn't come, or let's say institutions don't trade or don't take trades with only human beings. There are programs, algorithms that manipulate trade up and down, up and down, up and down multiple times. They sell shares in lot basis. There is too much manipulation happening. With the algorithm are far intelligent than a normal human being. Try to understand. You guys are competing with the computer, and do you think you can beat a computer? Ever? Is it literally possible to beat a computer's maths? No, right? That's what you are competing with. You cannot literally win the matches that institutions are trying to play against you. Why institutions are always against you? If you don't know the reason, let me tell you. Institution, if they want to buy something, somebody has to sell. If there are two institutions buying and selling, that is okay. But if both institution wants to buy together, they cannot buy it because there are no shares to buy unless there is a big, because institution wants to buy in big huge large chunk of quantity, 10 lakh 50 lakh quantity of shares. Do I have a 50 lakh of shares to sell to somebody? No, not at all. We are puny people who has like say 50 shares or 100 shares or 1000 shares, something like that, right? At that 1000 shares, see, 1000 shares itself is too big of a thing, but there are investors, right? Those who have ranging from 5 shares till 1 lakh shares. Collectively every retailer will sum up around 10 to 20, 30, 50 lakh of shares, right? So all the retailers combined together, institution can trade against them. Now say S Bank said something good about them on media. Every retailer would assume that, I mean, the news watchers would assume that, okay, Yes Bank is the future of Indian stock market, let's all buy. What happened? This happened. But next day, the remaining set of, this is just only partial booking. The remaining set of booking happened here. They booked, started booking here. Now this is averaging, okay? Their sell zone was around 275 to 260 kind of zones. They have higher price, now 290. If they start selling at 290, they can average it down to 275. Say they sold 50 lakh shares here, they have another 50 lakh shares to be sold, and their average is around over here. When the price is above here, they can start to dump like anything. They have easy access to the fresh set of retailers who thought S Bank is the future, and they started dumping, boom boom shakalaka. It came down. Now their average will be around this, it's just 30, right? Their average will be around within this box. They will sell here, sell here, sell here, sell here, sell here, sell here, sell here. Ultimately they would have sold everything. Now this is a new set of buyers who might have thought, okay, price has come down, that's why. So that's why they bought it over here. But still it didn't hold actually. Price just went down. So this is a cycle of a stock in which for a price to rise it takes very long time, because the buyers, they are not that confident whether this will go up or not, so they don't step in so easily. But whoever bought here, once they feel the price over here it just broke down, everybody starts to dump, and that dumping process is so fast. From this point to this point price reached within a week, but for the same point from this to reach, it took over this much long time, from July mid to August to September to September mid. This happened in 1 week. This happened for 2 months. For price rise to happen it takes time, but if price falls, just like anything. Now the lesson for this is, you can make tons of money by selling. Selling can give you awesome money, because fear is a thing that makes everyone not to lose money, so they will dump shares quickly. That can be used as your advantage. Now whenever price falls, don't you fear, okay? That is something you should absorb inside your mind and take up a sell call. That's what you should do. Fear has higher weightage when compared to greed. Making money part took this much time. The greed comes slowly. The fear is spontaneous. It's just vigorous, so vigorous that it falls like anything. That's why you see everywhere a fall will have greater impact. See, the fall is spontaneous. It took like 1, 2, 3, 4, 5, but for the same price to rise till the same zone, it took like around a month. That is what you should take into account. Unless there is a huge demand, that is a different story, right? Now you saw climax. This is called climax, at the climax candle. You should spot this climax candle with respect to volume. Only volume can give you the sense of climax. See, even the same volume can happen over here on this candle itself, but here there were no volumes, so I don't think that was necessary. But there are candles which have highest volume on the last candle. This happens majority of the time. And if you plot the same thing that I said, oh yeah, we already have it, something like this. Okay, it didn't do that well over here. I tried to do that. Okay, it didn't happen. Never mind. If it doesn't happen, means it doesn't happen. What can I do? It didn't work. Oh yeah, it worked over here. 3 moving average. That's nice. Anyhow, so see, this happened on upside, and the same thing can happen on downside as well. PC Jeweler, you just saw it, right? I'm talking about climax candle. That's what I'm saying. This was a huge climax candle. You see, this was a whole 1 day, but from price started from 473, it came till 220. Do you think at this zone people will have the fear? See, whoever has bought here, they would have dumped it already here. But consider this. This is a new support, right? Price, even though fell down, it breached a little bit. There will be a fresh set of investors over here, or a fresh set of traders who thinks price is so cheap, let's buy it. Who cares if the price is falling? No, it cannot fall forever. Company will run, because PC Jeweler is a jewelry company, so company will run for some reason, and for that some reason price is cheap, 200 odd, so they bought it. It's always about traders emotion, guys. and girls. Okay. Here too the setup was climatic, and let's see the volume. Why do I yes, yeah, this is the volume part that I was saying, right? The volume kept increasing on every candle. On this particular candle you see the highest volume, yes of course, and the 3 moving average is right above. That's a big win. And that concludes our climax candle. Now moving on, one more concept that I need to teach you is the patterns. Again, pattern is not my favorite thing. I am not a pattern trader except for one pattern, only one single pattern that I follow, and that is ascending triangle and descending triangle. See, it's just the name, okay, don't worry about that part. Let me take this to weekly, that will be far better for you guys. Yeah, this resistance, agreed. First test, second test, third test, agreed. And what happened over here? I connected the dots of the highest point of this to the lowest, and from this lowest I connect to the next higher low, and price tend to react over here. See, this is a confluence, this is more like a dam. You know dam, of course you should know a dam, right? Yeah, this one, you know, right? Oh come on, good, give me a nice picture. Yeah, this one, when this shutter gets open, the water flows in a big force, but when it is closed they are stored, right? It's more like that. Yeah, this seems a better example. See, there are total of 1 2 3 4 5 6 to 7 shutters over here. Now the water is collectively staying here, and at some point only one shutter gets opened, and every water would want to escape into this hole, and that is what is happening here. This is the dam shutter, and water is the price, and once you get this small hole, every price wants to fly out. This is called ascending triangle because it looks like a triangle, as in like this. It's a triangle. Look at this. See, you don't have to look into this triangle factor stuffs and all, it doesn't matter. Excuse me, I'm sorry. So you don't have to look into this triangle factor, it really doesn't matter. And yeah, all you need to care is about the support and resistance. This is one pattern, ascending triangle. Now there is this thing called see, you have another ascending triangle over here. See, again, it's you don't have to plot the triangle. That is not what I'm trying to teach you. What you need to plot is always support and resistance. With this as reference, you can do any kind of game. See, test once, tested twice, and it broke out. Now if you take PC Jeweler, let's take back. What is happening over here? What happened over here is also a kind of triangle-ish formation. From this high, see, price getting lower highs and broke out. This is a descending triangle, something like this. But even without knowing the names called descending triangle or ascending triangle, you already know that price when making lower highs, it is a downtrend, and when price consolidates like this, it's a consolidation, and a breakup consolidation gives you the opportunity to sell it, and there you go. This is the only pattern that I look on major scale, and you have, see, these are unwanted pattern that I am gonna teach you really. This is considered as, what I'm gonna say might sound terrible to you because I'm not expert on this pattern stuff. See, people say this as a flag and a pole. See, it looks like a flag. Get it? You cannot simply see. People teach all sort of stuff. See, this is a flag. If you see, it looks like a flag, right? A flag and a pole, hoist flag. How do I say that? One second. Flag and pole pattern. Yeah, of course, we have flag and pole pattern itself. Yep. How come on, seriously? United States of America now? See, it's just like this. You see a big pole and a flag over here. That gives this portion. Now what it indicates is, when you have a flag and pole formation, meaning an up move and a pull back, when you have a breakout from this flag, this top line, what it tends to do is, this is the next set of distance that price can travel. The pole's distance. This is the pole. This is where price can travel. That is what is being said. Now this is another flag. How much distance can it go? This much distance. It may work at times, it may not work at times, because I don't bother that much, because we have the father of everything called support and resistance. All you need is a breakout, a pullback, extension. This is what you're gonna see. You don't become a breakout trader, okay, please. That doesn't give you an edge. I have seen tons of breakout traders, but only certain breakout traders live properly to trade next day. Not every breakout trader. See over here itself, if you see over here, he took it, this breakout trader might have taken the trade at this very next candle, because he might have spotted this as a trade opportunity, but price came down. This guy might have taken only 50 shares to buy, but when price is cheaper for you, it is very cheap. You can buy 80 or 100 shares for you. You can get 100 shares and keep a tight stop loss. This guy's risk is this much and your risk is only this much. You can take higher shares. This guy's target might be here. Even you can place your target, but you get a higher reward because you have a higher number of shares, right? This guy's reward is only this much. For this, his small number of quantity, his although see, even for this guy, his quantity is less, his target is also less. For you, you have higher number of quantity and a target is higher. Imagine the growth of this guy's account and yours account. Who will be bigger? So that's why I like pullback. You get cheaper price than these guys. These guys are all beginners. See, breakout is taught for beginners only. Now you are not a beginner anymore. You have taken this course. You are not a beginner. You are a pro. At least you a pro wannabe. You want to become a pro, right? So try to buy at wholesale price, not a retail price. Buy here. Place your stop loss here. Aim for high, and buy a bigger quantity than this guy. That's how you will be a successful trader, dudes and dudettes, right? And see, I can keep on going with the patterns. There are double top. Let me tell you what double top and double bottom is. You might laugh when yeah, we got a double bottom over here. See, this is a W shaped movement. This is W. from here. There are two tops here, right? Sorry, two bottoms here, right? This is called double bottom. So how does a double bottom trader trades is, when you see the first leg, this is the first bottom, you wait, you get this, and when price comes down, takes another bottom. When price breaks above this zone over here, okay, you get a you get the confirmation of double bottom being formed. This W gets confirmed after the break of this. So the target for these guys is the distance of this one, this depth. If you take it above, this is what their target is, which is over here. This is called double bottom trading. But you, as a support and resistance trader, what do you see over here? Support, first leg of support. What is this candle? A long bearish candle and a big bullish candle combined together. What do you get? Another hammer. Correct me if I'm wrong. It's another hammer. Draw another support. What type of candle is this? It's a mega bull candle over here. Honest support. You can buy it over here, right? Support buy. And what type of candle is this? A mini hammerish candle. It's not mini hammerish anyhow, right? It's more like a doji. Forget it. So doji cannot be used as support. But combine all these together, you have an incredible support. Even though candle breached here, don't worry. It did come up, right? Buy it. What's wrong with you are buying at cheaper price? And what is it? A trend line. You can place your stop at the swing low. Buy here. You get a cheaper price. For a double top guy, where do you think he can place a trade? I don't know. See, breakout traders risk is very high. Okay, a pullback traders risk is so low, and your stop loss is also awesome. And when you get a reward, that's it. You are in heaven. And you, assuming you bought over here, you can do this. You can exit exactly where the double bottom traders exit, with the greater reward, right? They enter here, target here. You enter here, target here. Cool. If I'm not wrong to say, it's cool. Now you can enter this one with, there is no pullback, right? You didn't get a pullback over here. Even the pullback did this, it didn't touch your zone. So even for that you couldn't enter. Now this is double bottom. Where is a double top for you guys? Let me check. This is a double top. Not yet. Where is a double top? This is a double top. Yeah, it seems like a double top. I think so. See, I'm not expert on this because I really don't value this double top part. No, it's not a double top, by the way. It cannot be counted. Oh yeah, there is this formation called head and shoulders. Let me tell you that as well, because that is also one type of pattern. Price, sorry, what is this? Okay, price moves up, takes a rest, price does again an up, does this, price again up, does this. Okay, now consider, replace, connect. Okay, this line, if you see, let me draw something for you guys. 1, 2, 3. This is your hand. Imagine this is your hand, you as a human being. Okay, this is your hand. You have a shoulder, your neck, your head. Your head comes here, your neck, a shoulder here, your neck again, your shoulder, your next hand. People call this as head and shoulder pattern, by the way. How to trade this? When you see first, this part you will never see unless you see 3 points. Okay, so on the third point this candle forms. What you do, just draw or connect this wing to this wing, extend it out. What you see is a mountain, 3 mountain, a small mountain, a big mountain, a small mountain. This is called shoulder, head and shoulder. So 2 shoulders and a head. How do they trade? They measure from head top till shoulder length, and when price breaks over here at this junction, they get this measurement tool and measure it till here. Price can travel to this zone. Apparently it did travel. Okay, I'm not against it. It of course traveled till here, but why to do this? You have other option called trend, support, resistance, right? This is after all a breakout trade. Don't ever rely on a breakout trade. Now if you invert this, if all of this invert over here and forms, this is a downtrend and it forms this one like this, see, it's just inversion. Okay, what this is called inverted head and shoulders. Okay, or this, it is the same mechanism. Just measure the head till this one, and upon the breakout measure it. This will be your profit booking for this entry. That is called inverted head and shoulders and head and shoulders. Now this part you need to have an eye upon price. Only then you get to see. If I just scroll around and ask you where is a head and shoulder, can you identify it? I would say I don't know, because you have to find it, right? Because it's so hard to find. Pattern traders, they should have an incredible eyes. Only then it is accepted. I'm sorry. And what else can I say? Patterns, yeah, pretty much that's how. Yeah, this is a descending triangle, making price making lower highs after lower highs. At one point it just broke out. See, this is something, only this is the part that I take as a breakout. This is where I love. This is the only thing that I do. And where can I show you other? Yeah, this can be considered as a head and shoulder. Shoulder, head, shoulder, breakout, right? You see, looking at this, how ugly is it, right? Head and shoulder. I mean, I'm not saying patterns are ugly, but it's so hard to find out. That's something to understand. Do we see an double? See, there is this thing called double top as well, and double bottom. You just saw double bottom, right? Yeah, this is a double bottom, and I cannot get you a double top. I'm so sorry. Nifty, please give me a double top. This is equal high, but doesn't mean the double top. Double top can be confirmed only when, see, this is good example, but let me show you the negative aspect. Some traders, what they do is, upon reaching this, they assume this to be a double top. when price only does this much. I would say this is wrong. Don't assume this as a double top. Out there, if you are already trading patterns, for those guys I'm saying this move until here, if you think this is double top, no, wrong. Price needs to break this, come on, seriously, needs to break this low. If you get a close below this low, only then you get a double top. And measure this distance, draw that. That is what you should do. But unless this candle closes below, there is nothing you can do. Okay, so that concludes our patterns altogether, and this is by far the lengthiest session you might have attended. Have a drink yourself, and of course I also need to drink myself. Okay, and so that concludes our chapter, and next chapter would be the in-depth analysis. Okay, that's something really good. You will get to know a lot of steps. Even if you are a existing trader, that chapter is going to help you a lot. Okay, and see you next chapter. Good.